Hi, everybody. Welcome to our very first Ask an Accountant webinar focusing on gaining an understanding of your taxes. Before we get started, I just wanted to share a few notes about this webinar. You will be receiving a recording and the slides from today's webinar in the follow-up email that will be going out tomorrow morning. Also, if you're having any technical difficulties throughout our webinar, we suggest you refresh your GoToWebinar page and re-enter the webinar. We apologize in advance for that. Quickly, just want to walk through our agenda for today. We're going to introduce our speakers for the day. 45 minutes will be the majority of our presentation, and then we'll go into that remaining time with our Q&As submitted from the attendees and registrants. Alrighty, so my name is Nick Allen. I am the Marketing Events Manager at SimplePractice and have been for the last 2 years. I've been managing the Ask the Experts and Ask the Accountant webinars, and very looking forward to this webinar today. Very excited to introduce our speaker for the day, Edie Gardner. Would you like to talk about yourself and your work, Edie?
Sure. So thank you, Nick. So welcome, everybody. My name is Edie Gardner. I am a very bizarre combination of LCSW and CPA. I recently got my EA license too, which just means I'm an enrolled agent as well. Just means I could do taxes, file taxes for people all over the country, but also represent you in front of the IRS. I choose not to do that work, but I could technically do that work. I do have my own private practice. I started my own business in 2012 when my kids were tired of me helicopter momming them, and but at that time it was only an accounting practice. So I was really just taking on accounting clients, and then in 2017 I fulfilled my bucket list dream of just being in private practice with my own counseling practice, and I focus in on life transitions, elderly, and especially with stress management, anxiety, and compassion fatigue. That little blurb in that next paragraph is what I wrote. I wrote a book on anxiety, on 10 symptoms of anxiety. They're common to any form of anxiety, and you have to write a little blurb up in Amazon, and so that's what I did. And I really do get confused when people ask me what I do for a living, because I left my job as a hospital social worker to go back into the accounting world to work with nonprofit organizations, and my supervisor gave me an acrylic keychain that said, "But I'm really a social worker," because she wanted me to make sure that I never forgot that I'm a social worker. But I never forget that I'm a social worker. But when people ask me what I do for a living, I really am confused, because I'm both this weird combo of accountant and social worker.
Perfect. Thank you so much.
Work for you today, right? Sorry.
No. Thank you so much for your time. We really appreciate it. And I know our attendees are looking forward to getting this insight experience based around taxes and accounting. So thank you so much.
Of course. Thank you. Thanks for this opportunity.
Of course.
All right. So should I take it away?
Yes, please. Thank you.
Okay. All right. So I am really, really excited to be here today. And it's not just because my kindergarten teacher said that Edie will not stop talking, but it has everything to do with the fact that I really love to support people who have their own private practice, because there's a lot of confusion about doing your books of your practice. And this is something that you don't learn in therapy school, right? You don't learn how to manage the books of your business. And so hopefully today we're going to really zero in on the subject of your taxes. I was so thrilled that SimplePractice and Nick Allen were really energized to be able to take my crazy idea of expanding their Ask an Expert to an Ask an Accountant series. And they took to it wholeheartedly, and I'm really thrilled. Now we have a large group here today, either here with us live or here with us in getting a recording. And so we have over 5,000 people. So with that, I would imagine we have a variety of people in different levels of your business, of your private practice. We probably have some very seasoned clinicians who have been working on the books of their business for a long time. And you might have very, very sophisticated questions, on tax questions for me. And then I have a feeling that a majority of you are either very new to the business, or some of you may even be thinking about starting your own private practice in 2022, and you want to get all your ducks in a row and you want to learn about managing the books of your business. Some of you are maybe last month received your very first 1099 and you have zero idea what to do with it. And so what I'm going to try and do is, I can't answer all those questions in a 1-hour talk, but what I'm going to do is I'm going to start with the very basics, and I'm going to do what I think is just a very simple understanding, hopefully not too dry of an understanding about your taxes of your books. Now, at the end, I'm going to give you lots of opportunities to be able to connect with me if you have some questions that I wasn't able to get to, especially if you have some more sophisticated questions that are more particular to your particular situation. Okay, so that's where we're going to go with that. Another reason why it's really important for me to reach out to people who own their own private practice is because I get so passionate and fired up about the joy that I personally experience every single day of owning my own business. I have self-proclaimed the Queen of Acronyms, so I love acronyms, which is the first letter of a series of words that you want to remember. And it's ironic that the acronym for the joys of owning your own business is actually JOB, because when you own your own business, you don't treat it like a job. You have matched your passions with your skills into creating something as a private practitioner in helping people. So there really is nothing like being your own boss. But with that, that doesn't have to mean that you do everything all on your own. It can be very isolating and lonely. So I hope you're going to find that this is an avenue where you can learn a lot more about something that's probably very foreign to you. With the Queen of Acronyms and with the joys of owning your own business as a job, I also want to make sure that you really are feeling the joy of your own business, and you're not feeling like working in the books of your business is more like Job from the Bible, because we know how his path was. So most business owners that I work with leave the last thing that they want to do, that they procrastinate, namely their books and anything that has to do with math. I mean, math phobia is a real thing. It's in the DSM. We either leave that to the last minute, or when you're tired, or at the end of a long day or week, or both, right? So hopefully today you're gonna find some real solid tools to be able to know what you're doing with your taxes in your business, and we're gonna remove some of those fears of working in your business. Okay, so I am going to try to not make this as dry and as boring as you may think that it's going to be, but I'm going to really try to just, I have a tendency to make things a little bit more difficult than they need to be, but I'm going to try to make this very, very simplified. And so we're just going to mainly talk about sole proprietorship, but technically there are 4 types of different businesses in terms of tax classifications, so that the IRS considers, all right? The most popular is a sole proprietorship. And a sole proprietorship is one that you file your taxes for your business, so your net income, and you file your taxes through your personal tax return. So everybody files a personal tax return every year. Hopefully everybody files a personal tax return every year. And that's a Form 1040. So your sole proprietorship taxes are reported on a Schedule C, which is part of your Form 1040. Already I threw in a bunch of numbers at you, so don't worry about that. But just know that when you have a business, and it's the simplest form is to have a sole proprietorship, you just run everything through your personal tax return. However, if the difference between being on a salary where you're an employee and having your own business is now you are both employee and employer. So you are subject to not only income tax, but now also payroll taxes, self-employment and unemployment payroll taxes. So you are both subject to the employee portion and the employer, because you're getting a 1099 and you're not having any tax withholdings. So that can be quite cumbersome, and we're going to break that all down for you, but I do just want you to be aware that now it's not just income taxes, but it's also payroll taxes. The U.S. tax system is on a pay-as-you-go system. So the IRS loves to have your money throughout the year and doesn't want to wait till April 15th in order to get all your money. So just as you have a withholding from your salary if you're an employee, the only way for you to be able to pay taxes during the year and when you own your own business is by making quarterly estimated taxes. Okay, so I'm going to teach you all about that and how to do that. The one pretty major downside to being a sole proprietorship in that tax classification is that since it's run through your personal tax return and there really isn't any difference between you and you having your business, is that all the liability is also you are personally liable for your business. So I'm going to teach you something that mainly about having insurance that is an added protection. I've been in business for my own business for quite some time, for 10 years, and I still am a sole proprietorship. And I work with, you know, I have my own counseling practice. So I have these issues too of being personal liable in my business. But there are definitely some protocols we can put in place where you're going to feel a little bit better about that. But I do want to bring that out because that is important for you to know. So no matter what your tax classification is, you have to make sure that you're adhering to employee, independent contractor, and payroll regulations. And they are kind of numerous, but we're going to break it down. 90% of home-based businesses, now I know you might not necessarily be a home-based practice, but 90% of home-based businesses are sole proprietorships. So they are the easiest and most immediate formation for a business. You could technically set up your own sole proprietorship next week, next month. It's very easy. It's the easiest of all the businesses. You want to make sure, though, that you have full coverage in malpractice insurance, but also in general and professional liability coverage. This is one of your safety measures to create a cushion between that personal liability and your business. Okay, so you really want to make sure that you have all kinds of malpractice insurance and as well as the regular general and professional liability. There are lots of forms that you have to fill out with your business, and if you do not apply for an employee identification number, you're using your social security number. So all you have to do is go on IRSgov and apply for an employer identification number, and that is your business's social security number. That is your tax ID number that you will be using. So you don't have to have your social security number out there. You also want to make sure that you're obtaining a license with your city. And this is true even if you're working out of your home office, you still need to have a business license with your city or county. Okay, so now that I have my own business, what kinds of taxes am I going to be subject to? So the first one I want to talk about is payroll taxes. So like I said, you are really considered the employer and the employee now, and you're paying both of those taxes. So when you're a salaried employee, your employer actually pays taxes based on your salary as well. But now you get to be paying both of them. So that's the bad news. But the good news is that you get an adjustment on your personal tax return for that employer portion. So really, it really does work out that you're only paying about 7.65% of your net income of your business on payroll taxes. Okay, so initially you pay 15.3%, but then you do get this adjustment when you file your tax return that you are really only paying like 7.65. Okay, that was pretty nerdy throwing those numbers out there. All right, so you're going to be paying Social Security and Medicare. That's called FICA taxes on your business. But the good news is this helps you later because this helps you to be able to collect Social Security and Medicare benefits. Almost every state, pretty much, well, I can't say that for sure because I'm in California, so I really only know California law. But almost every state does not subject your services, counseling services, to sales tax. So it's pretty much something you probably don't need to worry about, but I just want you to make sure you check with your state requirements on sales taxes. California taxes everything and anything they can, but even California does not yet, they might, but not yet charge sales tax for services provided, counseling services. Okay, so the main thing that you're going to be paying in addition to payroll taxes is going to be your income taxes, all right? So since you are no longer having money withheld from your paychecks, you have to pay your income taxes through the year via estimated quarterly taxes. Okay, so your clients or insurance companies are paying you gross money, right? They're paying you revenue without any taxes removed. So this is your way through making quarterly estimated payments of paying the IRS throughout the year on your earnings, on your net income. So you don't have this huge payment that's due in April 15th. So your quarterly payments are due April 15th, June 15th, September 15th, and January 15th, which is the next year, okay? So now this is the majority of your questions had to do with not being subject to penalties on your taxes. And so the best way to avoid paying penalties is to make sure that you are either paying 90% of this year's taxes, or better is 100% of last year's taxes. For those who are a higher income tax brackets, in the higher income tax brackets, which means if you're married filing joint, you have, if it's $150,000 or more, you need to be paying in 110% of last year's taxes, okay? So last year's taxes doesn't mean just the taxes on your business. It means all of your personal tax return. So remember, we're talking about your personal tax return that's run through, your business is run through there. And you need to pay the IRS. The next year, you need to pay at least 100, and for some, 110% of last year's taxes. So if you are making $150,000 or more, if you're married filing joint, but if you're married filing separately, that limit is $75,000 or more. So if you are married filing separate returns, you have to have paid in 110% of last year's taxes. Okay, I imagine there's some questions on that, but hopefully it'll become clear in a minute. So I wanted to point out to you, this is a Schedule 1. This is a separate schedule on your personal tax return. So these are some of the adjustments to your tax return. And I just wanted to, I can't really point with my arrow because it's so sensitive, and I'll go to the next slide, but I wanted to point out line item number 15. So this is where you get to take as a deduction, well, not a deduction, but an adjustment, the deductible part of self-employment tax attached Schedule SE. SE is for self-employment. So this is where you get to take a credit for that employer portion of the payroll taxes that you've paid. If I've already lost you, don't worry, stay with me. I know that I tend to talk a lot about the details of this, but please stay with me because I just wanted to point out that this is where you would be putting that. But you're going to be working with, you're not going to be working with the forms. You're not going to be filling this out, so don't worry about that. I just want to show you that's where you get the credit. I also really wanted to show this slide because line item number 16 is magic. So this has to do with retirement plans. And this is something that I really encourage you to consider getting some kind of retirement plan for your business through an investment firm or bank. It's a really complicated area. However, the tax savings are enormous. So you can put up to $58,000 every year into a retirement plan. So I just want to let you know that that's where you can do that deduction as well. So this is an example of a Schedule C that you would be filing with the IRS as part of your personal tax return, okay? So I just want, I'm not going to go through all those line items, of course, and many of those line items would not apply to you as deductions that you get to take on your in your clinical practice. But many of them are, but there are some that just wouldn't apply to you. But we're going to go through some of the deductions that you get to take. Okay, so I wanted to give you the marginal tax rates for the different tax brackets that you might be in. And I wanted to show you a little bit of a way of saving in your business for taxes. Because the worst thing is, even if you've paid all of your quarterly payments and you're fine with that. You're not going to be assessed penalties or anything. Nobody likes surprises at the end of the year on needing to pay more. So how can we build in some savings and ability to be able to put some money aside for taxes? And one way is by taking your tax rate and tax bracket and to take a certain percentage of your taxes, of your net income that you deposit every month. I said net income, but I meant deposits. So let me back up. So Michael Michalowicz, you may know, he's written many books, but one of his books is called Profit First, and he has a really strong mission of making sure that you don't have these surprises. And he has you separate out your income from your business into different buckets and expenses. So he has you save money. And one of the ways you can save money is by taking a certain percentage of how much you deposit every month from your business into a separate savings account, so you can save that and put it aside for taxes. So it's kind of like out of sight, out of mind, and you've got this forced savings. So I don't know if it's Michael Michalowicz to suggest 40%, but I have heard that that's a great general guideline, is to take 40% of your deposits that you make during the month and to put it aside for taxes. Now you're going to have money left over, but that's nothing but a good thing, right? So you can save it for next year's taxes, but it is a good way to force savings. So why 40%? Well, if you're in that tax bracket that's 22%, let's say for an individual, that means you're now remember, this is not just your business, but this is all income on your personal return. So if you have a spouse that is a salaried employee, this would be included in that. So all of your earnings on your return, all of your interest and dividends, anything that you might have, you know, a lot of those people, a lot of us in our own clinical practice have a lot of side gigs, right? So you may have salary positions where you actually get a W-2, or you may have just some side gigs, but everything included, if your net income is in that 22% range, so there's 22%. Okay, and then if we are talking about that you now have to be paying payroll taxes, that's at least 7%. So now we're up to about 30%. So if you are in a state that charges sales tax, and I'm in California, and you can pay as much as 9% of your net income or your taxable income in taxes, so that's another 9%. So if you were to withhold 40% of your deposits of your income every month, you would be just fine and be covered. So this helps to force the savings. Something else I was going to tell you about that here. What was that? Can't remember, it's gone. So that's just a little bit of way. Oh, I know, I wanted to give you an example. So let's say, let's just say you had $1,000 that you deposited on your business income, okay? So you want to set aside, so you have $1,000, you want to set aside $400 and maybe put that in a savings account, so it's kind of outside, out of mind. Okay, now what I think a lot of people have some questions about, especially during a pandemic when many of us have moved our practices to telehealth services. Maybe some of you have already been doing it. I was doing it way before the pandemic. So there are lots of questions about a home office deduction and what can I take on my business. So I must say that I was guilty of spreading this rumor as well, but the IRS was really tired of having the reputation of and I was spreading the rumor too that the IRS, there was a reputation that if you did claim home office expenses on your personal tax return, that was a red flag and you were really likely to be audited. I still think that was the case, but because they were really tired of that reputation, they supposedly made this easier to calculate whether or not you are able to take a home office deduction, okay? So this is their easier way. This is a copy of a write-up on one of my CBE continuing ed classes, but I thought this was a really clear presentation. So these are the three thresholds that are the basic requirements. So you have to meet one of these, all right, in order to even think about having a home office deduction. And the first one is you have to be in business. Well, that sounds a little bit obvious, but there are many people who do have home-based businesses that are actually hobbies. So there are lots of hobby loss rules about with the IRS. So that wouldn't apply to you. I can't imagine that you are in private practice just as a hobby. So especially because you have to have a license to do this and everything. So I think you've pretty well satisfied that you are in business. I'm going to skip to the third one. You have to use your home office for business on a regular basis. The IRS hasn't really established what that means, a regular basis, but general guidelines are that you are seeing one guideline that was thrown out, not by the IRS, but by people teaching this course, was that you have a minimum of 5 to 10 hours. So others have suggested, well, if you like once a week dedicate to seeing clients. It doesn't have to be as monitored as that. You don't have to keep track of it that way, but I mean, if we're in private practice and we're seeing clients on a regular basis individually, we're probably seeing them on a weekly basis, right? So you've already established that. So that one's pretty easy. Now it's that second category that's really not so easy. This is the second category. This takes me out of the ability to deduct, even for myself, for my home office deductions. So you have to use your home office exclusively. And they do mean exclusively for business, unless you store inventory or run a home daycare center. There's always like these excepts with the IRS, right? Nothing's ever easy with IRS, but that exclusively, they really do mean it has to be all business in that office. This is one directive where they do actually specify you can't even pay personal bills in your home office in order to be considered exclusively for business. So right now we are in my home office. I do all telehealth for the most part. I mean, I do some crisis intervention, but that I go out to businesses for. So I do all telehealth here, and yet this is my office. This is my husband's office as well, and I pay bills here, and so I cannot qualify this to be my home office. All right. So, but let's say you do. Let's say you can justify that this is strictly your home office. Then you have to go on and meet one more satisfaction. So you have to satisfy to the IRS that you meet one of the rest of those criteria. And I won't read all of them, but I do want to highlight the first two. So your home office is your principal place of business. So if you do have a outside office where you see clients as well as a telehealth services that you provide at home, you cannot have a home office deduction. Okay, so you cannot kind of doubled it, right? You can't have both offices. And in order to qualify, one of those criteria is also you regularly and exclusively use your home office for administrative or management activities for your business. So that means if you don't have any other fixed location, but just kind of go out to different clients, that could still be your home office because that's your home base, it's your office base, and where you do administrative or management activities. So where you book clients or you pay, you bill insurance companies, you do all the regular administrative duties of your business. So that would satisfy that. If you do still qualify for a home office deduction, there are two ways that you can calculate what your the business use versus personal use of your home. You can either do the square footage of your home and estimate how much the square footage is of your business office, and or you can, if your rooms are pretty similar in size, you can do the simpler method, which is by number of rooms. So if you have one business office room versus however many rooms you have in your house, and that would be a way to take some personal expenses that normally wouldn't be deductible on your personal tax return, you can tend to take them for that business expense. But like I said, it's really hard to satisfy that middle requirement where you're exclusively for business. All right, so I just wanted to let you know that even though there are extensions, the ability to extend your personal tax return, it doesn't extend the obligation to pay. So you still have to be fully paid in with all of your taxes by April 15th in order to not be assessed penalties or interest. But you can file your return by as far ahead as October 15th. But that doesn't mean that, I mean, in order to figure out if you've paid in all of your taxes, you're kind of doing your tax return anyway. So there are definitely examples where individuals cannot file their taxes by April 15th, and that's usually because of maybe investments and partnerships and they don't have their K-1s out and stuff like that. But I just want to encourage you to just kind of get that mind clutter off by just extending on, not extending and filing on time. So to make this a little less stressful, it's important to know what is and what is not deductible. Hopefully you're getting some ideas here today. I really want to stress this savings plan of consider a retirement plan for amazing reduction of taxes. I also want you to know the differences between having employees versus independent contractors, because there are different filing requirements for both. This is an area that I do see with a lot of people who are expanding their private practice and want to take on other therapists within their private practice. So there's lots to consider there. I hear a lot of misinformation out there about, this is one area where I really hear a lot of stuff that is incorrect about, it's not whether or not you want to be an employee or an independent contractor. There's some really strong guidelines on which category you fall into. And if you're not sure, you need to default to you are taking on an employee. It's really tough anymore to prove that you are an independent contractor, because the IRS wants your money throughout the year through a salary, and they don't want to make sure that an independent contractor really knows what they're doing and then filing quarterly tax returns. So the default is that you have employees. When I just said that about consider a retirement plan, it gets really complicated when you do start taking on employees. So if you are expanding, that's fabulous. Congratulations. But you do want to get that extra added support with having a CPA teaching you what kinds of considerations you need to plan for. All right, so lots of questions about expenses and lots of confusion about whether or not you need receipts. And yes, I am going to tell you, you might not need to keep receipts, but the IRS definitely wants you to do it. I don't think I mentioned this, but you know, my bucket list dream was always to be in some kind of helping profession. I just decided to take the back roads by becoming an accountant first. But you know, my experience as an auditor taught me more about behavior and made me the therapist that I am today. I'm so grateful for that behavior because I tell people that as an auditor, I've been lied to by the best of them, that people would tell me all kinds of wild stories about their businesses. And the best answer that I could give them back was just 2 little words. I use 3 because I added the word please, but I would just say, prove it. And that's the way I imagine the IRS would be when you are audited. They hear lots of stories, but yes, I spent money on those receipts, and here I can show you it came out of my bank statement. But the IRS wants to say, prove it by giving me the receipts. So you do want to make sure you're keeping track of all of your receipts, and digital receipts are absolutely fine. It's super easy right now these days with different accounting programs that you can literally have an app on your phone. I'm thinking of QuickBooks Online, and take a, but there are lots of other bill pay, bill.com. I mean, there are lots of places that you literally have the business receipt, you take a picture of it, and it goes right into your accounting system. So it's so simple now, and the simpler it is, the more the IRS is really going to say, well, if I don't see it, I can't have you take it as a deduction. So some ideas that you may have not considered that are deductions for your business are continuing ed. That continuing ed can really add up. Your insurance, of course, is deductible. Your supplies, your business use of equipment. Now, just be careful if you are talking about capital equipment, which means like kind of your equipment that is going to last longer than a year. If it's under a year, that's considered a supply. But if it's over a year, you like computers and printers and everything, those are definitely expenses, but they're capitalized expenses. So you would take them in terms of depreciation. So let's just say something has a useful life of 5 years, and the IRS guides you on all this, you would take those expenses over the years of your business. All right, so travel expenses are, but this is, okay, if you want to hear about hot topics that the IRS loves to really scrutinize, it's the deduction for travel expenses. And there are lots of rules about it. And I don't want to get into the thick of things with those, but just know that you can take many travel expenses that I don't think some people are taking. In particular, you can take auto expenses. There are two different methods for calculating your deductions for your auto. The first method is the method I use. The method that is the easiest to use as well is just keeping track of your business mileage, and the IRS every year gives you the amount that you would multiply. I think, like, I don't know if it's 57 cents right now, but it's around that, and you get, if you tell me you have 1,000 miles, you would get 1,000 times 57 cents per mile. And that is your deduction that you get to take on your Schedule C on your personal tax return. The other method is keeping track of all of your auto expenses, and that would include depreciation and everything. So, and then multiplying that by the business use of your automobile. So it's between personal and business. That's a lot more cumbersome. You can save a little bit more of money with that. It's a little higher deduction, but it might not be worth the added headache. Of course, your renewal of your licenses, not your actual obtaining the license, because that's getting you ready for your business, but your license renewals and your professional memberships are definitely deductible as well. So my main advice about your expenses is to keep track of everything, and absolutely to stay current. That's going to be my advice for everything, is to stay current with your operations. So because I told you there were 4 types, and we went over the main type as a sole proprietorship, I just want to kind of really quickly go through the other 3 types. So there are partnerships, and where it's 2 or more people may decide to form a partnership. A partnership is still where the income is passing through your personal tax returns. It's just at a certain percentage of the overall business, depending on what the partnership agreement is. But even though you are now a partnership, that personal liability is still true for the full partnership and applies to each partner. And what does that mean? That means that if you have a partner who has, let's just say, taken a loan out for the business and defaults on that loan, each partner is responsible for full payment of the loan, not their portion of the partnership. It's for the full liability. So they're going to go after whoever they can, the partner. So you might be responsible for the full thing. So it's really complicated. Many of you might know Dave Ramsey, who I think is this wonderful financial guru about getting out of debt. And he says that the only ship that won't sail is a partnership. I have had many clients come to me with the idea of forming partnerships, and I must tell you, I am negative Nancy on them, because I find that most say, hey, we've been friends all our lives, there's no way we'd let anything get in the way. But and so with that, they don't form agreements. So you want to form the agreements on and have a division of duties and exit strategies at the very beginning, and I find most people don't. All right, so the next most common one that I think many of you who are more seasoned and who have really developed a lot of income in your private practice may have formed an S corporation. So this is a special type of corporation where the net income is still taxed through your personal tax return, and yet you do get that protection as a corporation where you're not personally liable for the business's handling transactions. Okay, so you can't be personally sued up to your investment in your equity in the S corp, though. The big advantage about S corps is you avoid that double taxation that's found with C corps. Also, the S corp is now paying the payroll taxes. So you know how when you were a sole proprietor, you were paying both. The S corp is now paying taxes, but you as the employee of that S corp have to take a reasonable salary. So S corp's pretty complicated, and you still have to jump through a lot of hoops every year, like taking minutes and everything. So you really need to have a CPA be involved in your business. I know some CPAs who just recommend everybody in private practice form an S corp. I highly disagree with that. I think that it's too cumbersome. I also think there are many disadvantages of being an S corp, and I'm happy to go through that with anybody that may want to contact me later. But I just want you to make sure that you consider some of the downsides of an S corp as well. All right, I'm just gonna I mean, you guys could read this slide, but I just want to just touch that the last one is a C corp. A C corp pays and files their own taxes. You are a shareholder and an employee of the C corp, but there's also double taxation. All right, now many of you are like, oh, you said 4, but you didn't use the words LLC. And that's right, because LLC is not, a limited liability company is not a tax classification. It's a business entity, but it is usually designed to protect the owner from being liable of their personal assets. So you form a sole proprietorship, and you want that added protection where your personal assets aren't exposed, right? And so you form an LLC. Now, an LLC, I also am not an LLC because I am in California. And in California, any company, including LLCs, have to jump through a few hoops, not too many, but we have the Franchise Tax Board that state assesses us a minimum tax payment of $800. So for $800, you can have an LLC in California, but you have to pay that every year. And so that's something that I completely avoid, but I also do have that minimal exposure to my personal assets. However, I feel in my private practice that having insurance is covering me. I just want to really quickly go over that because this concept of piercing the corporate veil, because there are some people here who have mentioned some questions about an LLC. An LLC is a separate company, right? You are you, and the company is the company. But I find that many people, what this concept of piercing the corporate veil undo is by commingling this idea that personal and your LLC are one and the same. And those are 7 steps to make sure you avoid, to not make sure you aren't commingling assets, and that you are maintaining your separateness. Okay, that number 2, separate bank account, that is something that I would say for absolutely everybody, especially if as a sole proprietorship, including a sole proprietorship. That is the one thing that I think most people have the hardest time. They tell me, oh, I don't need to, I'm so small, I don't need to do, I just do this on the side. I just do a little bit of counseling clients. I don't care. If the IRS wants to see that you really are your own business, you have to have your own bank account. Okay, that's my little soapbox. Okay, so we are, this is just a slide from LegalZoom that just tells you a little bit about the differences between LLC and S Corp. Okay, even though I just said a lot of things that I probably did way too many details, I really do think that what we need to just do is to keep it simple. So as therapists, we understand so well the connections between our thoughts, emotions, and behaviors. So apply what you know about your training with CBT to your personal business ownership, and especially the ability to ask questions, to delegate, and to confront some self-limiting beliefs. That is what being an auditor has taught me so much about, is it is all about behavior. All right, so how do I keep track of income and expenses? Now, I will tell you that I'm very biased in terms of, I really do love QuickBooks. I love almost every program that that Intuit has. Intuit owns QuickBooks and everything. So I am a little bit biased there, but Excel is not an accounting system. And so you really do need some kind of formal accounting system to be able to keep track of your income and expenses. I kind of think of it like Field of Dreams. If you build it, they will come. If you build a sophisticated system, then you will get more and more business. That's what I kind of believe. Now, I also love and use SimplePractice, and I use their billing feature where I bill my clients through SimplePractice. And so it's wonderful because, especially because I know I have full faith in SimplePractice that they're keeping up to date with all of the HIPAA requirements. Accounting systems, for the most part, are not HIPAA compliant, okay? I mean, I guess there are some out there, I'm just not familiar with them. QuickBooks is not HIPAA compliant. So I do creative things in terms of I don't have my clients' names in my QuickBooks, but I do make sure that my counseling income is tracked and everything is kept through through a formal accounting system. Like I said, it's really sophisticated. You don't need all of the bells and whistles with your own clinical practice. For the most part, our private practices are really pretty simple and we don't have a lot of complications, but we do want to make sure we are still keeping track of everything. And there's a lot of automation now with accounting systems. I teach lots of people how to do their own books, and I mean, in my nerdy way, it's really fun for me. And for many personalities, including people who are math phobic, really do kind of enjoy the learning how to do. It's like a language, learning a language. So. Okay, so that brings me to Bob. That's my acronym for back office books. This is a feature that I offer on the side for a support group for your books. So there is the information about that. It's a way of really forcing an accountability plan to take a look at your books and every month. And so we want to avoid all kinds of surprises, especially tax surprises. So that's one way to do that. So these are some of the offerings that I have. I do one-on-one consultations. I do lessons in QuickBooks. I do personal financial counseling. And I also do counseling services, especially with money anxiety and for other therapists with compassion fatigue. Okay, so we're going to get to your questions in 1 minute. I just wanted to say that IRS.gov is your friend. IRS.gov/payments is where you can submit all your quarterly tax payments. But that is all for federal, okay? So I don't know about state filings, so you want to make sure that you're up to date with all your state filings. Treating your business with respect breaks through limiting beliefs and encourages more respect. So I really believe that you should pay no more, but also no less than your share of the taxes. But if you are paying taxes, that also means you are making good money. The more money you make, the more taxes you pay, the more money you are making. And the more money you are making in the helping profession, likely the more people you are helping. So it's all in our frame of mind. Okay, so these are some of your questions. How do you best estimate taxes due quarterly when you have fluctuating income? Okay, so as I had mentioned about making sure you pay in at least 100 and sometimes 110% of last year's taxes, it doesn't really matter if you have fluctuating income, if you've already paid in if your quarterly taxes that you pay are already covering 100 or 110% of last year's taxes, it's okay if you have fluctuating income. But that's another reason why you really want to be current with your books, because you want to be up to date, and you want to be knowing, oh, okay, I really am earning more money, and hopefully with each year you are earning more money. So you want to make sure, okay, I think I need to increase how much I'm doing for my estimated taxes. Now, if you're fluctuating, so that what fluctuating means is you might have had a one quarter, let's just say your first quarter was really high. You earned a lot of money because you took on a special assignment. I did a special assignment in the summer last year, and I earned significantly more in the summer than I had in other quarters. So I took a look at that, and I estimated how much I made through for the first 9 months of the year, and then I estimated how much more for the next rest of the quarter. So you're doing a lot of estimating, but as long as you have paid in 100 or 110% of last year's taxes, you will not be assessed penalties and interest. The reason why you really want to make sure that you have a good estimate of how much you're going to owe is you don't want that tax surprise at the end. Do I have to have an accountant prepare my taxes, or can I just continue to do them myself? So I hope this is taking a little of the mystery out of doing your own taxes if you're a sole proprietorship, because it's basically pretty standard if you have some kind of formal tax system. So like, I mean, I don't get any commission from recommending them, but I personally have always loved TurboTax. I used to use TurboTax all the time, and then when I started filing other people's taxes, I couldn't use TurboTax. I personally recommend, if you're not going to have an accountant prepare your taxes, to have some kind of formal system like TurboTax or any of the others. But you can continue to do them yourself as long as you aren't doing some really wild and out there things like some wild qualified retirement plans, or some wild calculations on depreciation if you are taking depreciation on some of your assets. So it depends on how complicated it is. Also, if you have been doing your personal tax return all along and now you have your own business, because it's just an extension of that, and because for the most part, people who are in private practice, especially like having a side gig, it's not complicated. So I really do think you can do your taxes on your own. This is my first time filing taxes for my LLC. What is my #1 tip that I would recommend? So if you are filing your taxes in LLC, remember you're an LLC business, but that doesn't necessarily tell me what tax classification you are. But my guess is that you're a sole proprietor. So it's called a single member LLC, and you're going to still be running it all through that Schedule C of your business. But my #1 tip is to make sure that you are current with knowing your books. So that means reconciling your monthly bank statements, saying that what the bank says I have on my accounting system. And your accounting system can be really simple. It could be like QuickBooks on desktop, or QuickBooks. It doesn't have to be QuickBooks Online. It could be, it doesn't even have to be QuickBooks, but that's the one that I use. It could be something really simple. It could be an app on your phone. They have even accounting systems that have apps on your phone. So my #1 tip is to make sure that you are current. And then the other one is, is to make sure that you are paying in quarterly payments that have at least 100% of last year's taxes, so you don't get hit with a surprise. What are the biggest, most common mistakes business owners make or are not aware of when doing their taxes? Okay, so I don't have my notes here. Hold on one second. I can't go to my screen. Hold on a second. I can't go to the screen, but I forget what I had outlined for the most common mistakes, but what I would really kind of consider is some of the common mistakes is that we don't take some of the deductions. We forget because maybe you don't have an accounting system that that's keeping track of your expenses. Sometimes we forget. I had a meeting a little while ago with a new client, and she said, I don't have any expenses. And I said, well, what about your continuing ed? And she's like, oh yeah, well, oh yeah, I've got that. And I mentioned a couple other things. She's like, oh, so I can take that. So yeah, so being aware of it, even though you have a relatively simple business of seeing clients, you do have some expenses that you can take. The biggest one that I recommend is having separation of church and state. So making sure that your business stands on its own with its own bank account. And no commingling of personal and business monies. So even that might even mean having your own credit card for your business as well. And you know what, we're going to cover a lot of those in the Ask an Accountant series about having your own business. We're going to do a lot about working with your books in later series. I'm really excited about what's upcoming too. Anything to know about taxes for private practice clinicians who are practicing in multiple states? This is an excellent question, and it reminds me of at Christmas time, a friend of mine gave me this little block with a paragraph, a little bubble saying to Santa Claus, when asked if you were a good girl, it says, Santa, it's complicated. So the answer to this question, it really is complicated. If I had to make a prediction, I would say that this is one area that the states really need to get some understanding on, because it used to be, prior to the internet, it used to be really easy to figure out how to pay taxes in different states. Is if you had an office and were seeing clients in that state, you had to pay the state for that money. Now that we're seeing clients, if you have licenses in other states as licensed private practitioners, we have to have our license to be able to practice in other states. And so, but we can do it through telehealth. So we have to keep track, technically, you have to keep track of your income in the various different states. So my opinion is that they're really going to need to look at this as they're looking at with licensing and how different the times are with the internet. Technically, you have to keep track of where you're earning the money, where the person is. So it's considered nexus, and there are different rules for being an employee versus being an independent contractor and having your own business. So technically, if you see a client in another state than your office where you're located, technically you owe that state taxes on that income that you've earned with that client. That's a nightmare to keep track of. And so that's what I think that states really need to come up with some real systems on how to deal with that. However, I will say that there are many states where there's a reciprocity. So you get credit on, like, your home state, like California, I would get credit for any state taxes that I paid on different states. But another thing that you could do is you could practice in one of 9 states, meaning Alaska, Florida, Nevada, New Hampshire, Texas, South Dakota, Tennessee, Washington, or Wyoming. So I would practice there because those are the 9 states that do not charge sales tax. But in terms of what we talked about with your federal taxes, there's no difference in paying taxes on a federal level. What can I deduct on my business if I don't have office space and provide only telehealth services at my home office? Great question. The most common question, I think one of the most common questions that we're getting. And I went over how you can, it can apply to your home office if you get that home office deduction. But remember that it's that exclusivity that's really tough to prove. Even if, like, for example, me, I don't take a home office deduction on my business. However, I do have a lot of expenses of my office. Well, not a lot, but I have expenses of my office, meaning I actually do have a landline, shocker, but I have a landline just dedicated for my office. We have 2 landlines, but one is just for my office, so I get to take those telephone expenses. I also take a percentage of my cell phone as a deduction on my taxes. So there are office expenses, paper, printers, you know, if it's split between personal and business. You have to do a percentage, but you can have many home office deductions that are not the home office, like your mortgage and rent or a percentage of that. You can't take that if you're not doing the home office deduction, but you do have other ways of deducting expenses that relate to your business. All right, Nick.
Perfect. Well, I can take back from there. Thank you so much, Edie. That was such great insight. We're seeing a lot of appreciation in the chat for all the great insight. So thank you again. Quickly want to just walk through this. We do have a couple webinars coming up. Ask the Experts working with eating disorders at the end of February, and then getting started with insurance billing with Barbara Griswold in March. I do want to add, we will be working a lot more with Edie. So if you did like this webinar, we will be working a lot with her over the next couple of months. So thank you again, Edie.
Of course, Nick.
And next slide. And then if you are looking to get more information about insurance or ask an accountant, which we, like I said, we will be doing a lot more with Edie, you can go to simplepractice.com/askabiller. All of our series will be on that webpage. And then next slide. And then I do just want to thank each and every one of you for being here today and being in attendance of this webinar. We want to thank you for all the hard work that you do every day. And thank you again, Edie, for being a part of this and sharing your experience, your expertise in this conversation.
Of course. Thank you, Nick.
Have a great rest of your day. Bye-bye.